Okay, couple of folks who are not in Canada, but they would like to understand what is Hamilton even means. So I'll just give you a little bit orientation about Hamilton. Hamilton is the fifth largest city in the Canada, and it is just in the middle of Niagara Falls and Toronto. If you can see, it also connects directly to the Kitchener. So maybe what I will do is that I will let Atif Bhai to explain a little bit about Hamilton, so we can have a little bit of orientation of the city as well before we go on to the project. Go ahead,
Sure.
Atif.
Thank you, Harsh, Fahad Bhai, for that introduction. So Hamilton actually is a very interesting city. It's actually has its history in steel in Canada. It's still called Steel Town in Canada. It started off as a sister city to the city of Pittsburgh in the United States, which is not too far from here. And it enjoys a very central location, as Fahad was mentioning. It is only about uh, 40 minutes to half an hour from downtown Toronto, depending on traffic. And similar distance to Niagara Falls. It's about 40 minutes to an hour to Niagara Falls, and similar distance to Kitchener. Kitchener Waterloo is the technological hub of Canada. So it's the equivalent of Silicon Valley, and Niagara Falls, as you know, is where the famous falls are. It's a tourist destination in Canada, and Toronto needs no introduction. So, very strategic location. The metropolitan area of Canada, of Toronto, is actually called the Greater Toronto and Hamilton Area. So, the GTHA is the major metropolitan area in Canada. This area, which you see from Toronto to Hamilton to Niagara Falls, has about 10 million people or so. So that triangle is also called the Golden Horseshoe, essentially. So Hamilton is in the center of the Golden Horseshoe and has a very important part to play when it comes to the growth of Canada.
What is the connection in terms of the transportation and logistic and workforce from Hamilton to the area you just mentioned, GTHA?
Yes, Bismillah ar-Rahman ar-Rahim. Allahumma salli ala Sayyidina Mawlana Muhammad. Yes, Alhamdulillah. As if you just go back to the map itself, Fahad Bhai, as you have displayed it, the major highways are connecting all these cities right there across. Where the red line is literally where the red line is going right across there, you can see the highways basically coming directly, like Atif Bhai said, that 30 minutes to 40 minutes right from downtown. Even if you're in Mississauga, that's much closer. And then obviously same thing goes as you can see on the right side, it extends all the way going to Niagara Falls, St. Catherine, Niagara Falls that way, right? So it goes, and then obviously one more thing is connects to the U.S. border as well too, which is New York, Buffalo, New York connectivity is there. And in terms of that's highway, then in terms of public transportation, the Go train basically connects that, and there are additional lines they're planning and infrastructure to grow as uh, the city is growing itself, and they do have a international airport, but limited flights are offered right now. But that's growing as the time is progressing. And one more thing, just to add to that, as we know that there's not much land left in Toronto, Mississauga, and Oakville, Burlington. That's why people have to move outside of Toronto, still in being in the GTA. That's the serves that. So basically, in terms of the connection, is the public transportation as well as the highways are connected with that.
Okay, thank you very much, Harith bhai, for that. Okay, so that I think we explained a bit about the city itself, and of course, when we talk about the rental demand, there's a huge rental demand as we speak. It is really challenging to find a good place in Hamilton right now to rent. So what I will do is that just right after that, I'll expand on the rental side of the area on the rental demand. So Haris bhai, if you can explain me a little bit about the rental demand and what are those numbers and what does those address and apartment and municipality and the price mean here? If you can give us a little bit orientation on these numbers.
Sure, absolutely. As we know that there's a big concern. There's so many immigration is coming into Canada and US, and majority of it, as we know, 60% of the people, 60 to 70% comes in Ontario wise, unless and until they have a program in different provinces. So majority of them immigrants are coming. If 350,000 plus immigrants each year are coming in. So obviously, as we have just stated, that there's a housing crisis in all over Canada, basically, and being Ontario the most populated, most dense populated there, the need is much more. So obviously, we chose Hamilton because obviously proximity of the location. So overall, if you really understand, there's a demand for it because the rentals are so expensive in Toronto that people are looking outside of it because they're able to come commute quickly, or if they have a job there, or otherwise university and schooling system is there. So the demand basically is flowing because Canada is in crisis of that. So Hamilton is no different to that. So that's why basically the rental of the Hamilton is gradually going up as well too. And we found that that we found it that this is a good opportunity for us to start the project there. And in terms of the rate right here, anywhere from basically $1,800 to $2,500 is the range if you look at that. So this one, when you look at it, these are the random ones, but the newer ones are obviously because the new construction ones are a little bit more. So the range that we have right now is anywhere from 1,800 to 25, and that's based on that pro forma. We used our numbers for rental as well too.
Thank you very much, Harisbhai.
Has its own economy by its own right. It's got a major university, McMaster University, Mohawk College. There's a number of teaching hospitals in Hamilton because McMaster University has a very big medical component in a medical school. So Hamilton is home to a number of hospitals, and our site is actually adjacent, just a few hundred meters from Hamilton's General Hospital. So there is also a demand for healthcare workers who are also looking for housing. And so the proximity to the hospital actually is a great advantage to the site at Barton.
Yeah, I think it's very important, and I think Hamilton General Hospital itself is the first or the second largest hospital in entire Canada. So it's pretty
That's
big
correct,
in
yes.
terms of and of course, based on the hospital requirement, we know there will be so much iteration in terms of doctor and the medical staff. So they are also looking for a walkable area, a walkable building where the building is ready. They don't have to worry about anything, and they can just walk into the hospital. So the project, and I can give you an orientation of the map. If you type our project on Google, you can just see the area itself. And just to give me 1 second. So basically, this will be the lot of land somewhere here.
I think Google has pulled up the wrong address.
Yeah, yeah. Let me just do it.
Barton Street
Yeah,
East.
yeah. So
Hamilton is yeah,
this is
there
the
you go.
lot of land, right? And then here we have the hospital. So it's like literally 4 to 5 minutes walk from the site. All right. With that, I think we have a little bit orientation on what we are dealing with, what is the city, what is the city potential. I just want to spend some time on the numbers itself, and then Atibhai and Harisbhai, I'll be challenging you in terms of the numbers. Not only that, the risk side of the project also, and the timeline also. So our audience can understand in depth. Because the motive of Mabrook is to be very transparent. So if there are risks, we need to explain and document those risks. And if there is any downside, we should explain it to our audience what could be the downside in terms of the extreme limits. And of course, what is the best what are the best dynamics or parameters we have taken into those numbers. So with that, if everybody can see on my screen, there is a PDF, and that is available on our URL also that we will share in a bit. But basically, it tells you about the subject side we did discuss. So you can see the area is mature. It's not a new area. It's very close to downtown. Basically, it is in downtown. If you just drive 3 to 4 minutes, this Barton Street itself is one of the biggest street in terms of the commute, and it is also going into changes and improvement as we speak. So with the proposed site, maybe Adiba, you can take it over, and then maybe I can
Sure,
just flip the slides and you can just guide us
certainly,
what are
certainly,
those
certainly.
sketches?
So,
Yeah.
and to be transparent, as Saad was saying, there were a number of options on this site, but we chose to go with an optimum density, meaning that we could have gone with more density, but the idea was how can we get the best return on investment in the shortest period of time? So there's a couple of things that have happened in Hamilton. There are some incentives in place in this area where the city is giving tax breaks for rental housing development. So that is actually a great opportunity for this particular site. And also the city has made it easier for buildings that are less than 10 units and less than 3 stories in height to get expeditious approvals, because that's what they call the missing middle. So we chose to do a building that was 3 stories with 8 residential units to be eligible for the expeditious approvals so that we are able to get going as soon as possible. And for those of you who don't live in Canada, one of the biggest problems with residential development and why we are in a housing crisis is not just immigration, is that generally the approval process in Canada takes a long time for developments. So for some of the high rises and big developments that we see in downtown Toronto, the approval process can be 3 to 4 years. For smaller developments, like maybe 10 stories, 11 stories in Hamilton, the approval timelines could be 2 to 3 years. So the idea was, how can we, you know, it's a small site, it's not a very large site, so we can't do something huge anyway, but to come up with the most optimum density. So we came up with the 8 unit, 3 story model for the expeditious approval. And then the idea was, given this small site, what kind of unit mix might be appropriate? So we went for these 1 bedroom bachelors and lofts. And the idea was that you're targeting young professionals who live and work nearby, who are not necessarily looking for a large space. So we're not targeting families for this building. We only have 8 units. So you would have either healthcare professionals, perhaps nurses, and maybe 1 or 2 of the units could also be used for Airbnb for people who are perhaps visiting, maybe relatives or whatnot at the hospital, because this would be then the closest quote unquote hotel to the hospital, because a lot of people are flown in here for medical treatment as well. It is the one of the largest hospitals in Canada, and people from surrounding areas are sometimes flown into Hamilton General for treatment. So there's all these opportunities, which was telling us that perhaps a smaller suite size would be more um, feasible, because if somebody wanted to rent a house, there are other options in the neighborhood, but not that many options for smaller units. And I guess Fahad Bhai, you can just skip, if you want, you can just go through the slides and show them the plans. So that's the site plan, that's just some images of the building, and those are the plans. And there are 2 parking spaces at the back, because this is a downtown area. You don't need a lot of parking spaces. Actually, we are discouraged with parking spaces. So on the ground floor, there's a very small retail space, which could be used for a small cafe, maybe, or something very small on the ground floor. And then the floor plans to the right-hand side show the floor layout, where you have 4 units per floor. You have 2 1 bedrooms and 2 bachelors. And then there's a top floor, which has a loft, which means those are double-story units. So in those ones, you have 2 1+1s, so those are almost like 2 bedrooms. So you have a room on the lower level, which is like a den slash bedroom, and then you have a bedroom on the upper level, which is overlooking down like a loft, and you have similarly another loft at the bottom, the 2 at the bottom. So those are like 1 bedroom lofts and 1 1+1 lofts, 2 bachelors, and then 2 straightforward 1 bedroom. So it gives a bit of a variety for people to choose from, what kind of unit they're looking for, and also gives us some diversity with the unit types. And yeah, so it's a very modern looking building. Hamilton's a steel town, so we started to use these sort of steel accents, sort of corrugated metal and whatnot. And then in terms of the project, it's a very short project. So our investors would be investing in when we start construction. So right now it's going through the building permit approvals.
Maybe I'm just in a meeting.
Sorry, go ahead, Atif bhai. Please do.
Sorry. Okay. So yeah, so in terms of the project ROI and cap rates and whatnot, so the market has a cap rate, which means the value of the project, how they're valued at 4.25%. So that's the average rate of return you would expect from a project like this. We are at a 5.38% cap rate, which means our project is valued more at completion. We're talking about a timeline of about 12 to 18 months to construct and an anticipated, inshallah, ROI of 31% when we are complete, at which point we will either sell this project or we might start a REIT and give it to another group of investors.
Atif bhai, what does cap rate means and why it is so important? Because what is the difference between this ROI 31 and this cap rate
So
5.34?
a cap rate is, so what you do is for rental buildings, you generally have a way to measure what the average rental return should be from an asset were you to carry it. And cap rate is not necessarily ROI because real estate assets go up in value, right? So, and you are also allowed to increase rent 2.5% every year. So even the revenue is expected to go up every year by 2.5%. But when you buy an asset, every demographic area has a minimum or an average, I would say not a minimum, but an average expected return on the rental part of it. So for example, if you bought a building for $1 million in Hamilton, if it's giving you an average return of 4.5 or 4.25% on that $1 million in terms of rent, then that is considered the average cap rate of that asset in Hamilton. Now, of course, as it's going up in value every year and the rents are going up in value, your return is actually increasing. But when you buy the asset, it should be at that 4.25% in Hamilton if it's a rental building for housing, for it to be considered average or normal. So we are above average when it comes to the return for rents that you should be getting. And then in terms of overall return, ROI, that is, the asset value, what it cost you, how much it went up in value, selling it. So that's a totally different metric. That's based on how much money you invested and how much you will get out of it, in terms of return. So there are two different metrics when it comes to measuring buildings. We use cap rate to find out the value of something when it's complete, as opposed to, how much rent you would get out of it.
Okay. Basically, our investor who come in and inshallah, once we start the campaign, when they invest, let's say $100, in between 12 to 18 months, once the project is complete, they will be getting a 31% gross rate profit.
That
That's
is
the
inshallah
estimated,
the estimated.
inshallah, an estimated profit and loss basis 31% return. And right after that, once the building is ready, and Haris bhai, what is your plan on the rent? Like how you're going to do the rental and how you'll make sure that the building is up legally and in terms of renting out to the tenant, that management and the building management. What is your plan over that? So because
Yeah,
what I
inshallah. So
understand,
soon,
once the building is ready, then after 30% is given as a capital gain, then the rental will start. So if you can little bit expand on that side.
yes. So our idea is we already have as part of our plan that as soon as basically the structure of the building start to go up, we will start our marketing because what we want to do is we don't want to have the vacancy, right? As soon as we get the occupancy in the building by the city of Hamilton, then we want to be able to rent it out. So that way we don't have any downtime and vacancies are there because obviously if vacancies are there, you're still carrying costs and stuff. So that will eat into our expenses. So that's why. So in terms of that, so what we will do is when the structure is up, when we are doing still improvement inside, we will basically we have all the plans ready. So we will basically start to lease them, potentially take the applications for the leasing. and then we have standard lease in place that needs to be followed by Ontario government, which we will adhere to that. Then we'll do the whole process of the credit worthiness of the tenant, making sure checking their IDs, making sure that they're employed, making sure that their credentials are good and their credit score is good and they're able to basically pay the rent, So we will basically do that before the building is even occupied. So I would say relatively 3 months before that the completion of the building will happen, we'll start assessing them, and we will do that, which is normal case here anyway. Normally, people start looking 2 months ahead of when they plan to move, because they might have to give notices and make plans if they have any other arrangements to make. So that will be about 3 to 4 months will be the good time. That gives us ample time to go through all these procedures.
Thank you, Hamza. Can you little bit tell us about the rental increase? Because I know in Canada there is a policy or a regulation where you cannot increase an year on an year rent, right? So how are you going to inflation adjust those rent? Because every year the cost of maintenance will go up, just like any place. So what are the flexibility we are having in this project? If I buy a share of this property, or I'm the owner, fractional owner of this property, then how will I make sure that the rents are adjusted as we go along?
Absolutely. So there's a two ways to look at that. So whenever a new person comes in, we have basically rent control, rent tribunal, Ontario tribunal is there that basically that mandates that the increase of the rent for the existing tenants. This is a very important point to remember that. So let's say when a person, so in our building, I'll give you in this way. So when we are basically trying to come up with the value of the rental for our building, there is no mandate for that. You can be, but you have to be competitive enough, meaning that somebody outside in the market rate is that, you have to go with that. That's not a mandate by the government regulation. Okay. So once you basically start that according to the market rate, yeah, these are the numbers that we have it. We are hoping that it will go slightly up. We will reflect it and try to maximize that at that particular time. Right now, for the basis of this is the minimum rent we will get it. So once the person, like I said, that we have basically gone through the screening of that, we have done it. So every year you're allowed, actually, if you look at it, every calendar year, which is from January, that you're allowed, the tribunal basically sets the percentage, which is anywhere from 2.25% to 2.75%, depending on it. But usually it's about 2.5% you can increase each calendar year. So the value of the building, so the question again begins this way. If the tenant is carrying forward, let's say a tenant came and he's basically went to the second year, the increase that you can have is about 2.5%. But if that tenant vacates in 12 months, the new tenant comes in, then whatever the market rate is, you're allowed to charge. That 2.5% no longer applies to the new person coming in. So hopefully, I mean, first of all, we don't want to have too much turnaround time, number one, but that's one. But minimum increase will be 2.5% basically each year, that is. So if you look at 5 years pro forma, that's about 12.5% that it will increase. That's where. And then basically another way to look at that is that the value itself of the properties do go up. So in that way, that, and like Atif bhai just explained, if the cap rate has been adjusted, you know what I mean? Because there's a demand, more demand for it, the people might take less of a cap rate, so the value will appreciate by itself. So the two ways to look at that: increase in the rentals as well as the cap rate adjustment that will reflect the value of the project entire building itself.
Okay. To summarize, what will happen is that, let's say if I enter as an investor in this project, inshallah, so I will be having estimated and gross ROI of 31% once the building is ready. So that means my digital shares or Mabrook is going to tokenize the asset. My token price will go to 131% gross, right? So from 100 invested, my token price now have moved to 131 gross. And then the moment I keep myself retained in the project and I don't exit, right? I understand there will be an exit coming in, and after the building is ready, will you will be giving exit option to all the investors who want to exit from the project, and the next investor can come in as they like. But let's assume that I'm retained on this project. Then Harisbhai is going to maintain a rent the building. The rental will coming in, so that is on top of it. So that means Harisbhai, the token price will increase as the building price increase. But in parallel, I will be also getting a coupon or a rental coming into my Mabrook wallet every month as an income. Correct?
Yes.
Okay.
I
All
just
right.
wanted to elaborate on that a little bit. Alhamdulillah, ourselves, in terms of our shares and tokenization, obviously, I'm sure that question might be coming. If it doesn't come, I can just elaborate on that when the time is right, Fahad Bhai. So our participant can basically know what we are meaning in terms of securities, of how the investment is protected as well, too, when we're ready for that. I can answer that.
One of the, I guess, Fahad, you've already answered that. I guess you've, so one of the panelists, one of the people asked about the blockchain aspect, but I see you just answered that question. So,
Okay, so that's fine. So I just wanted to expand a little more on the, let's say I'm an investor, my first worry is about the taxation. So now we have some people who are in Canada and some people who are international. So when they invest on the project, how if you can maybe Haris bhai explain us the SPV model, like how in reality I will be having the ownership of the building, not like hypothetical, but in reality, how you will guarantee? Maybe Atibhai, Harisbhai, you can answer this question that my ownership is in reality is on the building. Number one. Number two question is that how technically my ownership is applied on the building. Number two. And number three question is that if you can tell me that once that structure is giving me back the profit, what are the tax implications? So number one question, how the ownership will be applied? Is it applied or not? As in me as an investor. Number two, technically how it's done in Canada. Number three, what are the tax implications when the capital gain and the rental is coming back to me? So anyone can take
did you
this
want me to
question.
start, or did you want to start, Harisbhai?
I'll just start a little bit, Atif, then you can add it
Uh,
on to that.
no problem.
So, Alhamdulillah, just being in real estate. So, one thing right off the bat, I want to take this time to explain because obviously, myself and Atif Bhai, Alhamdulillah, have been in business for many, many years. So, we do understand security of the asset, how you have to protect it in terms of that, right? So what we have basically is a title. We have it. Land title is called. So every property, well, anywhere in Canada, basically, and Ontario. So it's Ontario land title is called. So what happens is every country in the world has a registration system. We all know that. So what happens is that is a very, very solid system basically on that one. So what happens is that when we have taken this in terms of this is what I was saying in terms of protection of the title. So the title of this our project 325 Barton will be in the limited partnership. So what happens is so the title is under that name. So anything anybody can go. It's a public record. It's a public record. Anybody can go right now to who owns that title. You're able to see it. That's a public information. You don't need permission from anybody. You can do that. So having said that, since our Barton project is into the limited partnership, so what happens is the title will be under that name, and the investors that who are investing into the project, they are the basically because what happens is, let's say as a whole, the whole project is 100%. Hypothetically, I'm just giving these numbers. So what happens is, let's say 25% is owned by the landowner, whoever that is, right? So what happens is 25%. So when we take the 100% share, the 25% belongs to the owner, the contributor of the land, let's say. And now 75% we need it for the construction and development of the project. So the 75% of the shares came in, and let's say hypothetically, right, the shares are worth $100. I'm just giving for an example, right? So what happened is 75 shares are there, they're there. So what happens now, this 100 shares list will be created, obviously, right? The 100 shares, 25 of them belonging to the landowner, and 75 will be, let's say we have 75 investors. All their name will be presented, right? Present on that, basically LP shareholder agreement. So what happens now, the shareholder agreement itself will be registered on the title. As you can see, Fahad Bhai has pulled that report. This is how it shows in the land. When anybody goes out, anybody can do that, and we can show the. I'll not get into the depth of it, how to obtain that. That's very easily. We can give in our project. We'll be giving the links and plus providing that. So I'll go more into the aspects of thing. Any instrument, anything will be attached with those numbers. So you're able to basically retrieve the documents with the document number, and it'll give you the whole information on that. So in our particular case, our shareholder agreement will be registered on that, with obviously protecting the privacy of the personal information for the investors. That will be there. But you, when you go as an investor, you're given a number, right? That number reflects your share on it. And obviously, the most important thing, if you take a look at the top of it, this the certificate will be there, which has a Barton address. It will have 325 Barton Street East, Hamilton, will say, and then there's a land title, office number, everything. So that's a legit paperwork identifying that property, who owns it, and what are any restrictions on it. So this is the very key important point, because being in the business for so long time, we have taken the initiative to make sure that it's protected, because what we don't want is over leveraging to happen, right? So obviously Sharia does not allow, number one, ethically you cannot do that because it should be there. So we have protected it. So in other words, I'll give you one example, and we can take it as an example. So what happens is somebody, for instance, what has happened is, what does over leverage means? Meaning a project which is worth, let's say, $2 million, but they have taken out $2.5 million on it. I mean, the point is that if you go to sell the project, you're going to get $2 million, but there is commitment over leveraging of $2.5 million. $2.5 million is due. The project is negative, obviously, like 50,000 to $500,000, 2.5 million, right? So this will, inshallah, will not happen in our operations, because what we have done is we have registered the shareholder agreement there. Anybody who wants to take out anything cannot do that until and unless they get the consent and they're able to do that. So that's a very legit way that, put aside trust, put aside reputation, everything. We want to do it practically, like Fahad Bhai initially said it, that we want to have a very transparent way of doing business. So that's what we are doing it, that anything that will deter, and give the chance for any errors or any mishaps, we have covered it up in that way, right? In terms of, I'm not getting into the tokenization yet. I'm only talking about the legality of that. Every property in Ontario which exists, which is registered with that, follows the same sheet that you're looking at it right now. Exactly same sheet. The format, the table, everything is there. So obviously everything will be different, because different. If, let's say, Fahad Bhai's personal home, if he goes out and pulls that paper, the same sheet will come out. So all the transaction, what's happening with this property, who owns it, if there is any mortgage register, anything, any liens, anything. So that's how we have done it at the title. So that way there's no mishap. So the way the money came into it, it will be distributed the same way, meaning that you invested $10,000 into the project, your $10,000 with the profit will be paid out the same way. Obviously, in future, if the things change it, if the project grew more, if any changes are happening, that will take effect with the consent of everybody. That I've answered the question, and we can take the further question for clarification. The second part of the question, Atiba, if you want to add anything to that, please go ahead. Then we can get to the tax portion.
No, Harisbhai, you covered it very well. Thank you. That's very good.
So very quickly on the tax thing, and we'll do the same thing. I'll just give a brief explanation on that one. So that way Atibai can basically chime with that. So having because one more aspect we have to remember. So what's happening is, in other words, the what I was explaining was this is LP model, right? This is LP, which is limited partnership, and then there's a GP. GP is the one which is basically doing all the work, and LP is the one who has the ownership and the title on that one, right? So for the LP portion of it, when you look at it in terms of from CRA perspective, taxes perspective, the design, the purpose of the LP is that the people invest into it as a limited partnership, and when the profits are distributed, basically distributed based on the ownership of the shares of it, and when it goes out, the corporation is not taxed. The people who have invested, let's say a person invested $10,000 and it grew to 35%, let's say. So it became 13,500. So the whole of 13,500 will be given to that individual. Let's say, example, Fahad Bhai invested $10,000 into this project. He will get, hopefully, whatever the number comes in, 35%, if that's what it is, 20, 30%, whatever that comes in, that whole money will go back to him, and there's no tax implication. The tax implication applies to the individual who is basically taxed according to the CRA. So if you're a resident of Canada, you are taxed on that basis. But if you're a foreigner, you're taxed on that basis. That's how basically that it takes place. I will give Atif bhai a chance if he wants to elaborate on this and go into a little bit further, inshallah.
Sure. Thank you, Harsh. So yeah, you absolutely described it accurately. That's so in a limited partnership, every limited partner is taxed based on their own individual's tax rates. So, for example, if you were to invest into the project as a corporation in Canada, then your profits from it would be taxed at your corporation, at the tax rate of your corporation. They would just show up in your balance sheet as income from investment or something in the balance sheet of your individual corporation. If you were a foreign investor, then you would be taxed as the tax treaty of Canada with your country. So, for example, if you have a tax treaty with Canada and there's a double taxation treaty, then you may not get taxed depending on your treaty with Canada. And then you would be taxed in your home country, or some countries there might be withholding taxes in Canada. In some other countries, there might be an established tax rate. So for foreign investors, it's more complicated because every country has a different sort of tax regime with Canada. The ones that don't have any tax treaty, I believe there is a withholding tax, and then you have to basically file certain documents to get some of that withholding tax removed. But that you would need to talk to a tax lawyer to kind of figure out how that works.
Thank you. The first question is from Saad Siddiqui. How did you get the 31% return? I think we kind of explained that based on the number crunches we have done, and go to the link I just shared on the chat, download the document yourself. You will see the numbers being run here and the base assumption. So that's how we're going to do the 31% estimated. And again, since it's a purely Islamic finance investment, and just like any investment, they are risks, right? So what we have done is that that's why I carefully mentioned it's a anticipated gross ROI. So that is based on the numbers we have just explained to everybody on this bits. If you have question, you can reach us out on the WhatsApp and everything. The first question is from Saad Siddiqui. How did you get the 31% return? I think we kind of you pay this out. Who will be giving you the money to pay the investor? So let's say Haris bhai or Atif bhai, I have a token or a digital shares. I buy it. Right now the building is ready. You guys stand. Someday I said, you know what, I want to exit. So I want to exit when the building is ready, where 31% gross estimated return is given to me. Who will pay me that money? Is it the waitlist? Is this the pipeline of the investors? Is it the Barton project itself? Or is there some liquidity pool we are going to set up? How we'll make sure that the money, the token can be liquidated that time? I think that's the question.
Sure. Atif bhai, you want to go ahead or?
Sure. Yeah. So if the question, I guess, is how is the token liquidated, right?
Yes.
Okay, so I guess what's going to happen is when the project is finished and the asset, so the token value will be established based on the asset value at that time. And once that asset value has been established, if let's say the decision is to sell the project, and the asset value will be established based on the asset value. And essentially what's going to happen is when the asset is disposed of, the investors will be paid, the LPs will get their individual profits that will come from the disposition of the token. Now, what would technically happen on the platform, how that would happen, Father, that I'm going to leave it to you. I'm assuming what would happen is technically, Mabrook might actually liquidate the token and pay out the investors. Is that not correct?
Correct. Yes.
Okay.
Yes.
Maybe you could
Yeah.
elaborate the mechanism of it. But from a simple P&L perspective, from the back end in the real world, what the transaction will be is that the asset will be sold. The proceeds that come in will go into trust to the LP lawyers. The LP has a trustee, which is not Mabrook. So the LP, all the money that sits in the LP is sitting in escrow and trust with a lawyer. So when the project is being constructed, the same thing is happening. Invoices are being submitted, and the trustee is releasing funds on behalf of the LP. And when the asset is sold, the LP owns the asset. So the funds sit with the LP, right? So, and then when they are to be distributed to the Mabrook platform, then there'll be a mechanism in place where Fahad Bhai will explain how that will happen.
Yeah. And just to give you a
Before,
little, yeah, go ahead,
sorry,
actually.
Fahad, I just, Fahad, if you could just pull the financial figures. Alhamdulillah, Jazakallah khair, Atif bhai, what you have just said is perfect. I just wanted to elaborate because we do get this question a lot, actually, because obviously this, you have to be number crunching person and you have to understand the structure of how real estate functions. Myself and Atif bhai, we have a combined experience of almost like 35 years together. But I'll go into a little bit detail what Atif bhai has said it so that way we can visually see it. Fahad bhai, if you can just point your mouse to the sections. Building evaluation, when you look at that one, on the right-hand side, it's at $4.4 million, right? So how did we come up with that? Basically, it was based on the income that was generated from the expected rentals that are minusing the expense, right? Based on the cap rate, like Atif bhai have described it. Based on the cap rate, let's argument's sake, we are basically at 5.38, right? So when you're taking that, the what is happening is based on the income that we are getting with the cap rate, the value has come in. So let's say that today, when the project is all fully uh, occupied, leased out, and then now we want to sell it. So in the market, we can go ahead and sell it. The value we have established is $4,416,000, right? So somebody will come and pay that money. So that money goes into the LP, that basically trust escrow account. Now, obviously, let's argument's sake, there were 30,000 shares with that. So you would basically, I'm just giving hypothetical, I'm throwing the numbers at you. So for just explanation purpose, that number of 4.4 million will be divided by number of shares. Let's assume that is 30,000. You know what I'm saying? Just for explanation purpose. That much money will go to each one until that 4.4 will become zero, basically. Obviously, subject to the expenses, which are legitimate expenses. That's how basically that will be paid out in the real world. Now, what I want to just take only 10 seconds to explain, because what we are doing, everybody, is that we're using our traditional way of doing business, right? Which is that we just explained with the GP and LP structure. Now, obviously, Fahad Bhai's expertise and everything is that we are tokenizing that to basically make this project available globally, right? That's where Fahad Bhai can basically explain, because that's his expertise regarding that. But literally, if you look at from the perspective of Ontario governance of any corporation, we have adhered to that, that each person will get it. Obviously, that each share, if it was basically tokenized, that has a connection with them, and that will be paid out. And I believe that Fahad Bhai will explain that. The reason I've taken a little bit time to explain, a lot of people have difficulty, and this is the majority time we get question about this payment and etc. That's why I took the time. Even though Atibai covered it, I wanted to repeat it again so it's easier for our participant to understand it.
You pay this out, who will be giving you the money to pay the investor? Saad Siddiqui is that who paid the 31% increase? It will be the, as just what Haris Bhai explained, everything will be escrow, SPV driven. And then in the systematically, inshallah, for now, the government of Ontario or the regulator, the license we will be working on will not allow us to do a P2P trade of the token. So for to start with, we are going to ensure that the LP, the owner of the projects, buys those. So we will be doing it via liquidity pool or reserve fund. So don't worry about the liquidity of it. It's well built in into the plan as well. The other thing I want to give an orientation how, because I think I'll just give you a little bit about this, maybe spend 2 minutes because we have a lot of questions coming in. So the moment, inshallah, we're going to launch this platform, you will be able to see the project itself. And of course, we expect everybody to do their KYC. So the system will do the automated KYC up to the level of the selfie checks and AML and KYC compliance, because we need to make sure that everybody who is the member of the platform, they are scrutinized, including the project owners, which will be doing KYB as well. So once they are reviewed and approved, the limits are assigned. Basically, it's just like an Amazon experience. So you come here, you look into the token circulation supply. You can click on the project itself, just like any crowdfunding platform. So what we have done is that we have kept it very much easy to navigate, not like a typical blockchain application, and where you can review all those information. What is my token locking period? What is the token price today? And this is tie up to the valuation and the document evidence we're going to provide. And as well as we do the revaluation of the property as it's being constructed, the price will change. So it will be backed by the asset. So we are going to avoid any speculation, anything which is inflated. Um, then you can come down, you can review the project itself, and I'll go not much into depth of it. You will have a regular update coming in transparently. So when Haris Bhai is doing the construction, then what are the construction activities, where we stand today, photo and video evidence, everything will be coming here. Who's the team behind? What are the KPIs? So all the KPIs will be listed here. So right now we haven't done anything here, but that's something we're going to parameterize. So you also know what are the KPIs. And those KPIs are questionable. You can challenge us, you can ask us if there's any change in the plan, that will also come here, and there will be a voting coming in. Common FAQs will be there, documents will be there, and this is the most important section where not only will pull the title information, as Haris Bhai was explaining a couple of minutes back. There will be some documents which will be really available to the investors. So they will have access to all the confidential document up to the level of all the invoices that we have paid, so they can reconcile it with the account and SPV. And there will be a couple of documents which will be unlocked. Those will be registered, will be available to the public, such as give me the stats of the area, give me the update on the building itself, or what are the pricing going on, so they can really browse and they can come into us as a next buyer of the token. So that's something platform is handling, and everything is audited. So once you have the access, and inshallah, once we roll out, not only you will be able to invest, but you will have your own dashboard where you can go and review all the pricing, what is happening to my token, what is the blockchain address of the token, all the forensics to the level of audit log, what kind of stuff I've done on the platform. So we have, alhamdulillah, with the mercy of Allah subhanahu wa ta'ala, we have been working a lot on it for last 2.5 years, and um, it will help you to basically invest in a very secure and direct way and more transparent way, inshallah. That's what I wanted to say about the platform quickly. And Siddiqui is the brother Amir have asked us a question. Can I invest with RRSP? So for the day one, no, but we are working with the Ontario Security Commission to get the RRSP approval. Inshallah, once we get this rollout done, we will be working on the RRSP and TFSA and all that. Inshallah, that will be coming, Amir bhai. Um, all right, and then I saw another question. Yeah,
Bharat, if
please
I just wanted to, just
go
if
ahead.
you don't mind, I was looking at these two things I wanted to explain. One question was there regarding the price of the share or the token, how we have drive it, right? Who's doing that? And second was a GPLP relationship between, right? Breakdown of that.
Yeah,
So just to explain that, if you, with your permission, if you allow me, if I can
please,
elaborate that on
please
that.
go ahead.
So
Go ahead.
the GP and LP is a two entities basically. That's a that forms which is as per the corporation, right? One is a limited partnership, meaning that nothing will happen to them. They are the investors, they are the owners of the property, they are basically owning that entity, this asset basically. The GP, general partnership, is basically executing all the day-to-day operation and executing the business plan to achieve that. In our scenario, we're looking at it. It's a vacant land right now. It needs to be finished into the, obviously, the rendering that you have seen, which is, Atif Bhai, you have described it, 8 units, 3-story building, right? So the GP will be basically doing that. So what happens is the funds and everything is in the LP account. All the funds are waiting there in the escrow account. As the progress of the project happens, there are drawers for the money, meaning that, let's say that we have finished the framing aspect. Certain amount of money will come from the escrow account, goes into the GP account. Then similarly, when the mechanical, electrical, and HVAC is happening, plumbing is happening, then the draw will come out again. And this GP will be paying it out to all the suppliers and all the contractors, the team that's working on that. And then there's a middle body, which is basically is called cost consultant, which will basically authorize the LP to pay to the GP because the project is progressing in the right direction. It is where it needs to be. That basically is a relationship. So the money stays in the LP. The money comes to the GP as the progress proceeds. Until unless they do their KPI, they will not get the funds. Meaning that they have to perform. Meaning that foundation or framing has to be completed. It has to be passed by the city. Only then next batch of money will come in. This, as Fahad Bhai has stated, we're doing this because to protect the integrity of the whole Mabrook ecosystem, right? This is a real estate project. We'll be doing so many different projects into agriculture, medical research, into expansion of businesses. Everybody will have it. 3 layers. I'm going a little sidetrack. 3 layers of compliance. One is the Sharia compliance. As you're well aware, it should be halal and it should be complied with the Sharia. Second thing is government regulation. Third thing is an industry specialist, meaning in this, a person who's a cost consultant is a specialist. We, as being in the industry for well over 35 years, are basically industry specialists for that. When we go to the farming, that farming industrial person will be managing and controlling the project. Now, just want to go quickly and say that how that basically the value of that asset, the share is came up is by the asset. How much is it worth? That's how we are basically doing. In our example, that the cost of the construction plus the land value combined, that is a starting point of the share. So if you can understand, I'll repeat it again. The cost to build the building plus the land value, current land value, will give us a cost to have that building basically up and ready for it. Then the value, which is the future value, is based on the income that we are generating, which I previously explained. So that's a relationship and that's equity. As being the Sharia compliance, there is no speculation here. So as long as the asset grows, the value of the shares are growing. Obviously, vice versa. This is tijarat. If the value of the asset goes down, the share prices will be going down. But there's no speculation in this because it's asset backed. Sorry, I've taken a little bit time out of
No problem. Atif Bhai, if you are available, Haris Bhai, can you? There's a question from Aves. What is the ownership breakdown between GP and LP? I think you answered it, but
Yeah.
maybe you can expand on it a little bit.
Perfect. The ownership, I apologize for that. Ownership is basically, no, they're 2 different entities itself. They're coming together to perform together. So that's the ownership wise. If you look at it, both of them will dissolve when the project is finished, right? Because the money from the LP, which I was talking about it, which is LP, they invested, let's say, I'm just giving an idea, $3 million into the project. They took out $4 million. That became zero, right? The $3 million which came in to the LP was basically used to build that building. GPA basically built that building, right? The relationship is basically to work together for that specific project, right? And obviously, GP has all the expenses, project management, consultant they have to pay and build that project. That's a relationship that they're having. But as far as the ownership is concerned, when they go to sell, only LP can sell it. The performance wise is GP, which is doing all the work, day-to-day business decisions and controlling the trades, controlling the site, updating the site. I mean, updating the investors of the progress of the project. That's the GP's basically. As far as the breakdown of the ownership, it's not really anything connected with ownership. Is the ownership is only with the LP in terms of finances I'm talking about. In terms of ownership, they are basically collaborating each other to fulfill the objective of this joint start of the corporation, which is GP and LP. That's the way.
Thank
In
you.
financial, there's nothing.
Got it. With the proposed side, maybe Atiba, you can take it over, and then maybe I can
Sure.
just flip the slides, and you can just guide us
Certainly.
what are
Certainly.
those sketches?
So,
Yeah.
so we and to be transparent, as Saad was saying, there were a number of options on this site, but we chose to go with an optimum density, meaning that we could have gone with more density, but the idea was how can we get the best return on investment in the shortest period of time. So there's a couple of things that have happened in Hamilton. There are some incentives in place in this area where the city is giving tax breaks for rental housing development. So that is actually a great opportunity for this particular site. And also the city has made it easier for buildings that are less than 10 units and less than 3 stories in height to get expeditious approvals, because that's what they call the missing middle. So we chose to do a building that was 3 stories with 8 residential units to be eligible for the expeditious approvals so that we are able to get going as soon as possible. And for those of you who don't live in Canada, one of the biggest problems with residential developments and why we are in a housing crisis is not just immigration, is that generally the approval process in Canada takes a long time for developments. So for some of the high rises and big developments that we see in downtown Toronto, the approval process can be 3 to 4 years. For smaller developments, like maybe 10 stories, 11 stories in Hamilton, the approval timelines could be 2 to 3 years. So the idea was, how can we, it's a small site, it's not a very large site, so we can't do something huge anyway, but to come up with the most optimum density. So we came up with the 8-unit, 3-story model for the expeditious approval. And then the idea was, given this small site, what kind of unit mix might be appropriate? So we went for these 1-bedroom bachelors and lofts. And the idea was that you're targeting younger professionals who live and work nearby, who are not necessarily looking for a large space. So we're not targeting families for this building. We only have 8 units. So you would have either healthcare professionals, perhaps nurses, and maybe 1 or 2 of the units could also be used for Airbnb for people who are perhaps visiting, maybe relatives or whatnot at the hospital, because this would be then the closest quote unquote hotel to the hospital, because a lot of people are flown in here for medical treatment as well. It is one of the largest hospitals in Canada, and people from surrounding areas are sometimes flown into Hamilton General for treatment. So there's all these opportunities, which was telling us that perhaps a smaller suite size would be more feasible, because if somebody wanted to rent a house, there are other options in the neighborhood, but not that many options for smaller units. And I guess Fahad Bhai, you can just skip, if you want, you can just go through the slides and show them the plans. So that's the site plan, that's just some images of the building, and those are the plans. And there are 2 parking spaces at the back, because this is a downtown area. You don't need a lot of parking spaces. Actually, we are discouraged with parking spaces. So on the ground floor, there's a very small retail space, which could be used for a small cafe, maybe, or something very small on the ground floor. And then the floor plans to the right-hand side show the floor layout, where you have 4 units per floor. You have 2 1-bedrooms and 2 bachelors. And then there's a top floor, which has a loft, which means those are double-story units. So in those ones, you have two 1+1s. So those are almost like 2 bedrooms. So you have a room on the lower level, which is like a den/bedroom. And then you have a bedroom on the upper level, which is overlooking down like a loft. And you have similarly another loft at the bottom, the two at the bottom. So those are like 1-bedroom lofts and 1+1 lofts, 2 bachelors, and then 2 straightforward 1-bedroom. So it gives a bit of a variety for people to choose from, what kind of unit they're looking for, and also gives us some diversity with the unit types. And yeah, so it's a very modern looking building. You know, Hamilton's a steel town, so we started to use these sort of steel accents, you know, sort of corrugated metal and whatnot. And then in terms of the project, it's a very short project. So our investors would be investing in when we start construction. So right now it's going through the building permit approvals.
Maybe I'm just in the meeting.
Sorry, go ahead, Atif bhai. Please do.
Sorry. Okay. So yeah, so in terms of, you know, the project ROI and cap rates and whatnot, so the market has a cap rate, which means the value of the project, how they're valued, at 4.25%. So that's the average rate of return you would expect from a project like this. We are at a 5.38% cap rate, which means our project is valued more at completion. We're talking about a timeline of about 12 to 18 months to construct and an anticipated, inshallah, ROI of 31% when we are complete, at which point we will either sell this project or we might start a REIT and give it to another group of investors.
Atif bhai, what does cap rate means and why it is so important? Because what is the difference between this ROI 31 and this cap rate
So
5.32?
a cap rate is, so what you do is for rental buildings, you generally have a way to measure what the average rental return should be from an asset were you to carry it. And cap rate is not necessarily ROI because real estate assets go up in value, right? So, and you are also allowed to increase rent 2.5% every year. So even the revenue is expected to go up every year by 2.5%. But when you buy an asset, every demographic area has a minimum or an average, I would say not a minimum, but an average expected return on the rental part of it. So for example, if you bought a building for $1 million in Hamilton, if it's giving you an average return of 4.5 or 4.25% on that $1 million in terms of rent, then that is considered the average cap rate of that asset in Hamilton. Now, of course, as it's going up in value every year and the rents are going up in value, your return is actually increasing. But when you buy the asset, it should be at that, 4.25% in Hamilton if it's a rental building for housing, for it to be considered average or normal. So we are above average when it comes to the return for rents that you should be getting. And then in terms of overall return, ROI, that is, the asset value, what it cost you, how much it went up in value, selling it. So that's a totally different metric. That's based on how much money you invested and how much you will get out of it, in terms of return. So there are two different metrics when it comes to measuring buildings. We use cap rate to find out the value of something when it's complete, as opposed to, how much rent you would get out of it.
Okay. Haris bhai, what about the city approval? Because in Canada, you can not just go and dig the ground. So what kind of risks we are dealing with in terms of that approvals?
I wanted
Where
to
we
just
stand?
add that, and yes, absolutely. But Atibai answered that question. Basically, as he has said, like we could have gone 5 stories at perhaps 12 to 15 units because the city was basically inclined towards speeding the process of the permit. So they said that maximum of 3 stories, and under the like 10, I believe Atibai said under 10, we're at 8. So we meet that. So they are very excited. In terms of this, as Atif Bhai has informed me, the city has originally was saying for us to get site plan approval. For those who are not familiar with that, basically that takes a little bit more time and more drawings and everything you have to do. Although those drawings and those reports that you submit in your permit way, you have to do it in site plan, but that delays that process. That meaning that you have to do site plan approval first, then go for the permit. But luckily, mashallah, willingly, that so far the city is going ahead. They said that we do not have to go for site plan approval. That means we save that time and that resources basically to move forward. So they were very inclined and they liked our project so much that they said that we will allow you to skip the site plan process, approval process. So we have achieved that. I just wanted to add one more thing, Fahad Bhai, very quickly. A lot of people in Canada being that they think when we are talking about the housing crisis and it's not there, it's not like back home or different countries. In Canada, the growth has to do it in a certain way. And there's a lot of land which is dedicated for basically green land, let's say, right? And conservative land, let's say, for different reasons allocated for that. That's number one reason. Second thing is that you do not have the infrastructure. Let's say you want to put a 5-story building on a farmland because the sewer system, electricity, gas, cable, telephone, internet is not available. That's why the project cannot just go in. The first, the infrastructure has to come in, then only you can develop the land, and that's urban planning, everything you have to do. So it's not like you can just go ahead and build. Yeah, you can go ahead. Maybe there's a 10-acre of land. You can build one home on it. A lot of people has this question. Canada has so much land. How come you guys have go build it anywhere? But you cannot just go build it anywhere in Canada. It has to be approved by the city. It has to support the capacity of the usage. Let's say if you have 100 people living, the sewer system will be according to that. Electricity usage will be according to that, right? The gas line will be thicker pipe, right? But if the pipe is not there, the gas line is not there, how are you going to heat up those things, right? So that's why you cannot just go ahead and build it anywhere. And plus, people want to work and live. Like Atib Bhai said that, Fahad Bhai, you pointed out that only 4 minutes walk to the hospital. People want to be in the city where infrastructure, schooling, everything is there. So I'm just giving it because we have a lot of participants which are outside of Canada to answer that question, that we cannot just go ahead and build it if we just find a vacant land here, and erect a building there. That's what, sorry.
Thank you. And there's a question from Arshad Malik Bhai. What about the management fee? So, when we are doing fundraise, Mabrook is going to charge somewhere between 3 to 5%, and those costs will be built into the cost of the project itself. Once we finalize the Excel sheet, we'll be sending out it to on the platform. It will be available so you can download and you can precisely see what are the numbers. Anything which is not in Excel sheet will not be part of the project itself. So we have made sure that all the expenses are mentioned there. Now come to the level of once the building is going to be rented and what will be the maintenance fee of that building, and how what charge is going to be built in terms of maintaining that building to the investor. That's something which will come just before the building is being ready, 3 to 4 months before that, because I think how you have to firm up all the building maintenance costs and the contracting the building for upkeep of the maintenance, and then ensuring that the rents are coming on time, and from the SPV bank account it comes to the investor. I think those are the fees that you will iron out just before the building is ready, right? The rental part of it.
Fahad Bhai, I will do. Mashallah, Atif Bhai has already addressed in his sheets
Okay.
everything. So the what you're looking at, the expected rental revenue, that's the actual gross revenue. Then obviously we have a formula depending on the type of thing is 25, depending on the type of building that we have it, 25 to 30%, 35% depends on it. That money goes towards the running of that. So when you're looking at it, that is minus those expenses right away, right off the bat. So just to
Okay.
answer that question a little bit more elaborately, the Mabrook platform fee, that as Fahad Bhai, if you can go to the screen of your basically platform, all those are part of that. So what happens is there's basically Barton project is paying those fees to basically Mabrook, which becomes part of that. They have to part of the project for that GP company. Basically, GP company basically
Hmm.
is basically getting the money to do that. They basically it becomes part of the cost of the project for that, and all the one which is operating wise, they've already been taken out. That's why you've got the cap rate, and cap rate is there, but I mean, potentially the income basically came in with that return 5.38. So that expense is already out. That's your net basically return on your investment.
Got it. But at the accounting level, those information will be available post go live
Yeah,
when
the
this
details
happens.
of that will
The
be available.
platform will be
And
providing that.
yes,
Yeah.
absolutely.
Yeah.
We'll have that, all the contracts, everything will be available, but in a journal standard way. What we have done is, what does it take to maintain this type of building, which is property taxes, electricity, any common areas, expenses, anything which is there. We took the percentage, we have done that, but the breakdown will.
Awais bhai have a very good question. Mr. Awais has a very good question. He's asking, what if the cost exceeds the amount raised? What would be the mitigation plan? Because you know, Haris bhai, Atif bhai, most of the project go over the budget. So what are the controlling factors that you have planned for that, for the
Okay,
cost
so
control?
Adib bhai, do you want to do it? Are you okay, or you want me to say it?
No, you go ahead.
Okay. Brother, so what happens is, in any, as myself and Atib bhai are involved in many projects, we have worked on it and stuff. There's a contingency cost, right? So what we have done is, basically we have factored that already into that cost. Basically, when you look at the pro forma and everything which is there, and we feel that obviously we have taken a little cushion amount of money to do that, and our thing is, alhamdulillah, we will not waste any of the resources. So if anything is left over, let's say that we don't utilize that 10% contingency cost, that'll go back to the LP basically, and that will remain technically remain in the LP account, and then the people will get that back accordingly, right? So in terms of that, we are very fairly confident, based on our experience, that we have factored and basically looked into it to make sure that comfortably we are able to do it at that rate. And this is post-COVID rates that we are giving right now. Obviously, everybody knows that pre-COVID rates are completely different to post-COVID, which is another good factor for us, that we are into post-COVID right now. Had it been before, that would have been obviously big risk factor, because everything paralyzed it, right? So that would have been different. In terms of this, to answer that question, we do have a 10% contingency cost, which is a normal way. Go ahead, Atib bhai.
Just to kind of clarify, I'm not sure if the contingency is 10% or not. I'll have to verify that number. But one thing's for sure, we do have contingency built into the project. So the contingency amount is there, just not sure if it's 10%. But I wanted to also clarify that the reason RSY was mentioning post and pre-COVID is that now, as economies are stabilizing, in Canada especially, inflation has come down. So we are sitting at 1.6% inflation, which is actually remarkable. So what has happened over the past year and a half is that the market here has stabilized, construction costs have stabilized, the sort of wages have stabilized. So we're not seeing the crazy jumps in cost every year that we were seeing during COVID times. So what Haris Bhai was mentioning is that because of that, in Canada at least, we are expecting stability in the market. Canada generally has been a very stable country, and markets have been very stable, but COVID times, we saw a lot of instability and inflation peaking to 9% here. But the government here took some very drastic actions, and now it's at 1.6%. So within 2 years, they brought the inflation down from 9% to 1.6%. So now we are in a very normal market, but of course, we cannot totally ignore, we have two cushions in there. We have a contingency allowance, and we also have a cash reserve, which is, I think, called a liquidity pool. So those two combined provide cushions for any sort of increase in cost or whatnot, if there is in the project. However, just like anything, I mean, God forbid, if it increases that, then of course that will impact the P&L. But inshallah, we are very confident in the two cushions that we put in place, and the fact the market is stabilized, that inshallah, we should be close to the target, if not hitting the target, inshallah.
Father, with your permission, if I may just make one comment,
please,
actually, a very, very important point that obviously two ways to identify. One is a Mabrook ecosystem platform. They were talking about it. And then second is the Barton project. The question, one of the question I was just looking at that, it was saying that basically regarding in terms of your experience, like I think we have answered it, because myself and Atif Bhai have been doing real estate development and projects for a very long time. So we don't have any portfolio and performance to show on the platform, because Mabrook is obviously starting up, right? Although we did a Bloor Street project already, but this project will become our basically performance in future. But like anything, we have to start it. But why did we choose real estate? The reason we chose real estate is because we have experience and expertise and know ins and outs of it. So obviously, to make it more successful, I mean, to not to have any contingency, any risk factors into that, we chose real estate. Like I said previously, our platform is catered towards fulfilling the two aspects. One is a person needing the funds. One is a person wanting to investing the funds. That goes into various different industries and different classes of investments, right? In other words, like we're talking about it, agriculture, medical research. If somebody wants to start up a Islamic schools, let's say somebody wants to grow their businesses, as long as they're legit, they're able to do it and stuff. So the Mabrook platform, just like Amazon puts the buyers and the sellers on a same platform, Mabrook is basically person wanting the funds and wanting to invest and earn on it. It's putting together, but sky is the limit in terms of, as long as it's Sharia compliance, as long as it's doable, and as long as it meets the potential of profit margins for our investors. And that
If
Mabrook
I
will
may
do that.
add to that, Harsh bhai, I mean, I'd be
Yes.
happy to share with the team. I mean, yes, Mabrook is a startup, but if you want to look at my profile or Harsh bhai's profile, I actually am a licensed architect. I run an architectural practice in downtown Toronto. I mean, but if you want to go to aaa-architects.ca, we do some very large projects. We are right now doing uh, 4 towers, 30 stories with 2,100 units. If you want to go to our projects, go to the mixed use. You can see some of our projects. These are projects, mixed use projects. Actually, if you go to mixed use in the projects, you will see some of our buildings that we've completed. If you click on 77 James up there on the right, just 77, these are all the buildings that we have either completed or are doing. So I've been practicing architecture for over 20 years and also doing development consultancy. So that is one of the reasons why I'm part of Mabrook. I'm a member of the Ontario Association of Architects. I'm also a member of NCARB in the US. So yeah, in terms of project experience, this is a very small project. Our firm, we do some very, very large projects and very complex projects, urban housing developments within Canada. So just wanted to kind of put that out there, that the team that's running this project, including Haris Bhai as well, who has a wealth of experience in real estate, we are well versed to take on a smaller project like Barton. We chose to start small because Mabrook, as you know, is a startup. So we did not want to overwhelm Mabrook with a large project. But within our network, we have access to some very large projects as well. So that is coming, inshallah, afterward.
Thank you, Haris. I think that's the question from Taha Nasir. That's the question we have asked. And of course, credibility and trust will come when we join hands together and then inshallah we work. And the best way to judge anyone is that to deal with them. So first, we want everybody to understand the project itself, transparently ask us all the questions. No questions are wrong question. And then once they are comfortable, then they invest. And then inshallah, that's why we have chosen the smaller project. So we can just try to prove ourselves. And when I say us, it means the entire community that inshallah together we can do something which were not possible historically. And the beauty of the project is that forget about the technology of it. Even the technology is not there tomorrow. You have a direct ownership of the project. So we wanted to make sure that you can really drive up to the building and touch it and see what is going on. You can go to the city and as Haris Bhai explained, says that verify whether these guys have really put my ownership or not. Yes, I can see it on the platform, but and on the blockchain and the Polygon, but can I really check from the city? So those are the parameters we have made sure that the platform does it automatically, inshallah. I think that's it. And then
Atif
one
bhai,
question from yeah.
Fahad bhai, just to elaborate on that, like Atif bhai said it, Fahad bhai, if you can just go back on a little bit back screen to this one where Atif Bhai was basically featuring that. The projects he was doing, 8 unit and 3 story is really, really very initial level. Myself, I've been involved, and obviously because that's a connection that myself and Atif Bhai have, is that we've been involved in different projects. Like right in Oakville, that I was involved, and myself, Atif Bhai, were involved. That we have sold that project, obviously, but that was like 8 stories building there. Then I built commercial plazas and basically build custom homes and stuff. So that it does it. So this project itself, the reason we are taking Barton project as a one which was very lucrative, number one, as we have explained in last an hour, and second thing is because Mabrook being tokenization and everything, so we wanted to start up with a small project to wrinkle out everything. But nonetheless, as far as experience is concerned, and then protection of the project, everything, as Atif Bhai is explained it, Atif Bhai has a finance degree in he has a finance degree. So having architectural firm itself running it, so we are really bringing a lot to the table. This is just one first project, but our idea is that we grow globally as a Muslim ummah in a community, and that we flourish. That trying to take the riba out of it and basically adhering to that, and to make sure that the protection and transparency, due diligence are all done in a way. That's why we are scrutinizing everything. Every project will go through the same scrutinization, because last thing we want is any loose ends for any project.
And just to summarize, because sounds like Sabir is a little bit confused about the specifics of the project. I think it's a very good question. Just to sum up, this project is a rental only building, so it's not like you can buy an apartment and start living in it, that, right? I mean, you can be one of the tenant, but the entire project is a rental building, inshallah. And what will happen is that there's a empty land here right now, and as you can see the video running, it will be a three-story building with a retail unit, as we explained. Once you invest in this project, the early you invest, the more benefit you inshallah will get in the timeline. Once this building is ready, then Mabrook and the team will be taking care of the rental side of it. Everything, of course, legally and compliant way we are doing, and we have explained it. So the summary is it's a rental project where you can invest with as good as $100 and start building a halal investment portfolio. So I think that's it. Thank you very much, everybody, for your time over the weekend. And if there are any questions, let us know. By the way, the moment you sign up from this, you will also have an access to our WhatsApp group where you can ask any further question. I'm sharing the link again. Inshallah, we'll send it on the email as well. Sign up here. The platform, inshallah, in the next follow-up webinar, we'll expand on the technology side as well. What is that app? What does it do? Where I can see my token. Then we will let you ask question that what if somebody duplicate my token? What if fraud happen? All those questions will inshallah have it in the next follow-up webinar, followed by some Sharia compliance of the Barton project as well as the platform as well. So thank you very much, everybody. Assalamu alaikum warahmatullah. Please enjoy your weekend.
Bye-bye. Wa alaikum.